From the trading desk of dailyforex.com, this is Christopher Lewis looking at the Christmas Eve trading session in the Euro US dollar. And the most important thing to know about this session will be the fact that it is Christmas Eve. So while we will have trading, it'll be abbreviated hours in most of the Western world, which means the markets will be pretty thin. Because of this, we're very cautious about trading in this time period. But there are a couple things on this chart that are worth pointing out right now. The action that we saw on Friday was a sell-off, but we found the previous resistance area to be very supportive, and that's what you expect to see. We have had two shooting stars, so that shows the 133 level being very resistive as well. Now look at this. It almost looks like we're going to be stuck in this little area from the daily chart. What I would bring to your attention, though, is the weekly chart. We have a perfectly formed shooting star. This shooting star couldn't be really much more idyllic in its shape and essentially where it's at. The biggest problem, of course, is the 3150 below it is supportive right now, and we would need to clear that. So really, looking at that, if we were to break down, it would suggest that perhaps we would go back to consolidation. 129 is probably a pretty safe bet at that point. But the biggest problem is you're going to have to know that it's not a false breakdown. I personally believe that if we can get below like the 131 level, basically give it an extra 50 pips, then we probably will run down to 129. Alternately, though, a move above the 133 level is extraordinarily bullish because of the fact that it breaks through both of these shooting stars and, more importantly, a weekly shooting star. The trend continues higher, and as such, the fact that this candle is essentially sitting like this right now on the weekly, this is what I call a sucker pen. Pen being a reference to Martin Pring, the great technician who calls on the on the bar charts, not the candlestick charts. These a Pinocchio candle. It's the same thing as a shooting star, but he calls it out because it's got a long nose. It lies. It means that we're about to roll over, if you will. So I call these sucker pins because the thing is a lot of new traders will see these candles and they'll go nuts when they see the shooting star or the sucker pin and they'll start shorting. But what they don't realize is there's quite a bit of support underneath it. So a lot of times what will happen is we'll get a quick little dip and then we'll turn back around. And when that happens, that's extraordinarily bullish. That's like the last of the resistance giving way. Whether or not that can happen this week is a completely different conversation, but I just wanted you to be aware of the fact that although this setup looks very interesting, it does come with some danger in this general vicinity. Fiscal cliff talks will dominate what happens if the people in Congress can actually do their job, and as well as the President of the United States, and come to some kind of agreement that actually means something. Then we would have a breakout to the upside. If they fail to do so, we'll have a breakout to the downside. And right now, the market's essentially held hostage to what's going on there, I believe. And that is part of why we broke out, yet we didn't really get to take off. So, interesting chart to watch. Next week or two should be very interesting in this. And again, we do have some very obvious parameters, but in between there is going to be a ton of noise.